Okay, we are back. Keep it seriously simple. This is the Trendlines module. Let's talk about some trend lines on some charts. This is a 1 hour euro dollar chart. Now, before we fill this chart up with a bunch of indicators and a bunch of drawings, let's just look and see what price is doing and has been doing. Let price be our guide to our decision making. So let's notice here that we start from these lows and we're going from lows to highs, higher lows to higher highs, higher lows to higher highs. Now, you might say, and this is what I'm actually looking at on this chart, I see this little run right here is a nice inefficiency. Now, we did have a pullback into that zone, but there's still, if I look at my crosshair tool, you know, this candle right here is still unchecked. This candle here is finally hit on this retracement, but we still have one unchecked candle right there. Plus, if you look where my crosshairs are, look at this previous high. Just left of that is another previous high. That could also be a future level of support. If we're going to see this market continue to balance, I would suspect that price wants to come back and find that at some point. So we go from lows to highs, higher lows to highs. Now, take a look at this. You notice in this little sequence, we go from this low to this low to this low. We could probably safely draw a trend line and connect the lows right here. All right, so let's go ahead and do that. I'm just going to use a trend line tool and connect the dots. So here's a trend line. And anytime I'm using a trend line tool, I like to make it so it's extended. And that way I can see, you know, even if I'm drawing the trend line here, okay, actually we draw it right there. We'll draw the trend line there. Now, the reason I like to have the tool extend my trend line is because now, if I connect the lows right here, there are a couple things I can do. If you remember back to the support and resistance video, if this becomes support, I can continue to buy those support levels. If this becomes my trend line break, I can obviously confirm that a break below this trend line would be a reason for me to sell. And if we see additional evidence that this is getting much more aggressive and much more bullish, then we'll draw a different trend line and make it kind of a more aggressive trend line. All right, so I've connected the dots off of this low and this low. And again, price is going from low to high, higher low to higher high. All right, so let's go ahead and just move forward a little bit. And I just want you to keep an eye out for price. We have a low right here, then we have another low. Price continues to make highs. Price pulls back and challenges that low. Now, the first thing I'm noticing with this little price pattern is if we have a low in price, that's a challenge low. You're going to see this in my price patterns video. Left shoulder, head to neckline, right shoulder. Price to me is setting up a bearish pattern. And if you are trading the price pattern, you can anticipate that sell area right up here on a right shoulder. And so you can look for a reason to sell, or you can certainly confirm that we have the break of this neckline and we have a break of this trend line, and we're probably going to come back and try to get back down to this previous low. We can measure this move as well. So there's all sorts of ways that price is telling me that I'm looking to sell. So let's see what happens. We have this high to low. It's setting up what I deem to be a head and shoulders. It's a nice structured price pattern. Let's see. Right shoulder setting up. Now we can probably set up a more aggressive trend line. Again, if you see this as a price pattern, we can set up another trend line right here. So let's do it. Let's use this as a neckline, okay? And that would be the break of the neckline. We can also use a trend line here on the right shoulder. Now, I understand that I have 3 trend lines that are all trying to tell me something. But if I have a price pattern, these trend lines are going to act as my confirmation. I want price to break this trend line and work its way back bearish. And we should see price not only break this right shoulder trend line, but also this neckline trend line, as well as this previous support trend line. Okay? So let's go ahead and take a look. If we zoom in on this, let's just treat this like a price pattern. Let's treat this like a trend line break. Do you see that we have price confirming on the right side of the trend line, yes or no? And all I did to draw that trend line is I established the low right here, or price established the low. We have another test, okay? That's what made me connect the trend line. It's not like I just drew this trend line at a random angle. This trend line was based on these lows, a higher low, and we have, again, a little bit of a wave pattern right there. It gives me 2 points to connect. I can draw my trend line and look at where we have confirmation. Confirmation is right here. Now, I'll tell you exactly how I'm going to trade this. I understand that this is a price pattern. This is a bearish price pattern. And when you're putting together these modules like support and resistance and trend lines and price patterns, you will see how these elements work together for us to take some really fantastic trades. But that is confirmation of that break. So that would be trade number 1. So I'm going to go ahead and do this. Let me use a box here. So let me box this candle in right there. That's going to be trade number 1. Okay, now because I have a trend line, look back to the left and let's see where this previous high was. Right here at this area, you see that we had a wick high, another wick high. If we come back to retest that, I'm just going to go ahead and use a horizontal line. If we come back to retest this level again, I'm going to take another sell trade. So this would be trade 1, this would be trade 2, and I would even reserve a trade 3 up here at the high. And you might be asking, well, why would we do that? Because if we're buying, wouldn't we buy that trend line support? But I'm not buying because I've already looked at this as a price pattern. To me, my objective is to be a seller. I have a pretty promising price pattern. That's a lot of P's in alliteration, but we have a promising price pattern with a head and shoulders. We have the confirmation of that right shoulder breaking, and we're very close to that neckline breaking as well. So if I take a small trade here, I want that trade to be small enough that my risk tolerance can run all the way up here without me worrying about the drawdown. So this might be a 0.5% risk, maybe 1% risk on this particular trade right there to that level. If I take another trade, same thing. So if I'm willing to take multiple trades, trade 1, trade 2, and trade 3, if this is a 0.5% risk and another 0.5% risk, and then this is a very minor risk because I'm not really giving it a ton of wiggle room there. I mean, I might look at a 1 to 1.5% total risk trading the area and looking to see if price can go from high to low, lower high to lower low. Just really simple symmetry in the market. Okay, so we'll take the trade there and let's see what happens. Let's go candle by candle. Do we get filled on the right hand side of the trend line? We do. Okay, so I'm going to go ahead and clone this. So we would have trade number 2. And can you also see what price did? Can you see that we broke the trend line? We retested the backside of the trend line. We went down to challenge what? We went down to challenge the neckline. Pretty cool, isn't it? You have lows, you connect the dots there. That's your neckline. Look, traders are getting more and more savvy about recognizing price patterns, and so they take a little bit longer to play out than they used to. It's still a valid price pattern as long as price doesn't invalidate this high. So trade 1, trade 2 was already predetermined at an equal high, and trade 3 would be up here at the high if needed. Okay, I don't necessarily want to see trade 3 get filled, but we have trade 1 and trade 2 in. Let's see what happens next. Okay, we have a nice bearish move. Everything's looking better. Now, if we get back down to this low or get back down to these lows, guess what's happening to our profits? We're in profit on both positions. So let's see what price does. Keep in mind that this is our neckline right here. Let's see what price does. Now price is breaking the neckline. Okay, we have successfully, from 1 trade, 2 trades, price is going in our favor. We're now in profit on both positions. Let's see what price does with our trend line behavior. So we're at the neckline, we're breaking the neckline. We come back, we retest the neckline. So we break the trend line, retest the trend line. We expect this to go a little bit lower. I'm already going to measure this ahead of time as a profit target. If we have this high to low, okay, high to low, I'm going to go ahead and clone this. Even from a symmetrical movement, this would be a 3-wave. Okay, and again, I don't want to lose anybody on the analysis here. This is just stuff that you're going to see happen over and over. You have a high to low. You're looking for a symmetrical lower high to lower low. So I know that in my trades, if I have trade 1 and trade 2, and I get to this level or very close to this level, I should be protecting my profit. That's a safe way for me to trade. I trade the probability of the price pattern, I trade the probability of the trend line break, and I trade the probability of this pattern coming to fruition with symmetry. So high to low, lower high to lower low. So let's keep this in mind. In fact, what I'll do is I'll take a horizontal line here and I'll change the color. Let me make this, let's make this one green. So if we get to this level, then we know that we should be looking to protect our profit. All right, but we have successfully taking our trades here, already predetermined on the price pattern, the trend line breaks. We have price going our way. We're in profit. Let's see what price does from here. It breaks down. Look left on your chart. Look left on your chart. Look at where we are approaching this low, right around 1.1090. Do we get there? And we do. So is it perfect? Did it go exactly as you planned? No, but did it go to our destination? And did you have a chance here to take some profit? Did you have a chance here to take some profit? Did you have a chance here to take some profit? The answer is yes. You set this up with trend lines. You set this up with structure. There's a nice trade 1, trade 2. Let's look at the pips. So we have this level all the way down is around 50 pips. And we have this level all the way down is around 67 pips. So you're looking at about 100, 110 pips between the two positions. Now, how long did it take? If you started this trade on December 19th and, oh no, I'm sorry, I got the dates wrong. That's December 17th and by the 20th. So 2 to 3 days of trading and you have 100 pips on one currency pair. It's a smaller price pattern. It's a 1 hour chart. But did this offer up a clean trade with a measured move? Break the trend line. Look at how price behaves. We break the trend line, we retest the trend line, and we go. Now, unfortunately, and again, this is probably just because we have traders that see this pattern, and so they put stop losses right there. What does this trade do? Comes up, stops them out because they don't understand where to put the stop loss to keep it out of the way of this price pattern, but it still doesn't invalidate the bearish setup. It's still a bearish setup. So you sell it here with confirmation. You reserve a second trade if needed because you can get a better entry. Trade 1, trade 2. We don't have trade 3 filled, but you wait 3 days and you have this trade pays, this trade pays. You take your money, you go find another trade. All right? But it all started with just watching price, having price set you up a nice trend line. If we're looking to sell high, let price set us up and let's look for a trend line break. Okay, once this trade is done, rather than keeping all this analysis on my charts, what I typically do is I come right in here and I delete everything, all right? And then I squeeze my chart and I start looking to see what's price doing now. Because we have this high, a lower high, a lower high. If we just took profit on that head and shoulders pattern, we can then come right back in and connect the dots on this trend line right there. Because what are we going to do? We're on the left side of the trend line. We've already taken our profit. What happens on the right side of the trend line? We should be looking to buy the right side of the trend line. Okay? So connect the high, connect the high. This becomes a nice trend line. Let's see what happens on the right side of the trend line. Okay. Do you see confirmation on the right side of the trend line? Yes or no? There's a confirmation break. Price is breaking. So we're going to take a buy trade right there. Okay. We'll buy that level right there. And because this really isn't an aggressive trend line, it's not an aggressive trend line angle, my second trade is probably going to be here at the low. So I'm going to reserve a second order down here at the lows. So that'll be the plan, is we're going to take a small trade here on the trend line break. If I see price break the trend line, pull back, we can take a second position on a pullback. Otherwise, this is a small trade. This will be a small trade, and we'll see what happens. All right, so let's go candle by candle. And let's see if we have a pullback yet. Do you see a pullback yet? Do you see the price retesting the backside of that trend line? Not yet, but you're in the trade. This is what I like to call a participation trade because we have confirmation on that break. So we're in one trade already. Price is going higher. Price is going higher. Okay, now, do we start to see a pullback? Not yet. In fact, this is a break around 1115 that we're in. We're up 40 pips on this trade. Okay, if we want to, okay, this would be trade 1, trade 2. If we want to, we could go to break even. We could go to break even and try to ride this thing as long as possible with the trailing stop. We could also scale. We could keep this one trade in, get into a second position, and try to stay with it for another trade, because keep in mind, this could be a 1, 2, 3 wave move. And we'll take profit once we have a higher high. But we need to have some type of pause or pullback first. So for the trader that gets in right away and you're immediately rewarded for that, it's okay to move your stop to break even and protect those profits at 30, 40, 50 pips, especially on a smaller time frame. Protect those profits. If it pulls back again, you can always re-enter. If you're willing to take the position trade, this is trade 1. Trade 2 is down here, or we're waiting for trade 2 to be an add-on after a dip or a pullback. So let's see what happens. Okay. I mean, that's a really generous trend line break, isn't it? We break the trend line right here and we run up. I mean, this is a 70 pip run to the upside. Now, given the fact that this instrument doesn't usually trend like this, that might be a good indication that we might want to take some profit. So we can look at moving a stop loss in here. If we get lucky on a trailing stop, maybe we don't get stopped out. But if we're up 70 pips with very little risk on this participation trade, we can probably just go to plus 20, plus 30, plus 40, whatever it is, and move it into a dynamic or a trailing stop of some sort. Take your profit. It's okay. Then let's see if we get a pullback. It keeps going up. Okay, now, if this goes up to make another high, so we have this high, this brief pullback, another high, a brief pullback. If we make another high, I am really interested in taking profit off of a trailing stop. I mean, really, I'm already looking at this chart thinking I've got to start looking at profit. Because why would I let this go all the way up here, pull back, and try to get back in with another add-on position? Instead, let's protect this trade and we can always re-enter. Okay, so we have our trend line break. We're in. If this makes a new high right there, let's get those stop losses in. Stop loss, move it. Stop loss, move it. Trail it up here. Get really tight in this price. If you're in at, 1115 and you cross the zeros, I mean, that's 85 pips. So move your stop to 75, move your stop to plus 80, and take your profit. It's okay. That's a great trade. It was nothing more than looking at price, a high, it broke the trend line over here. Now, if you wanted to get more aggressive on that trend line, could you have drawn it and connected these trend lines? Sure. But don't get overly aggressive on your trend lines. The steeper your angle is of the trend line, the more disappointing it's going to be with fake outs, all right? I'm telling you, price will set you up with great trend lines. If you connect the lows and connect the tops on price with what price is already doing, it's going to be a great trend line, and keep it there. So we've already made a great run to the upside. Let's see what happens. Okay, price is stalling a little bit. It keeps going there. So we have, this actually just reminded me of something. So we have price going our way, allowing us to take some profit. As soon as I started thinking profit protection, look at where we were. We should start looking left on our charts, taking profit right over here. That's about 75 to 85 pips of profit from this break. So we make 100 pips on this move. We break the trend line. We make 70, 80 pips on this move. Now, take a look at this low. Take a look at this low. Take a look at this low. You see that we're making these higher lows, these slightly higher highs. Now, I'm going to add one more element to make this a little bit more fancy, and then we're going to go into some other instruments and just draw some really simple trend lines. I'm going to show you momentum. All right, so let me go ahead and find a momentum indicator. Really easy. You just throw it here at the bottom, and I'm going to put in, I like to use the 20 momentum. All right, and what we should notice on the 20, that's perfect. Okay, take a look. Do you see how price made a higher high, higher high, higher high, but my momentum disagreed? The reason I wanted to bring that to your attention is because as this was drifting higher and we score a point for those bulls, the fashion in which it moves without a balance. You notice this is starting to get a little bit overbought? You notice that it's gone a long ways bullish without really much of a pullback. So we have slightly higher highs in price, noticeable disagreement in momentum. That is called divergence, okay? And the reason I say that is because I am looking at divergence as a reason to connect this low to this low or this low and just wait for confirmation. Because what happens over here? We protect our profits from this trade, so we're in protecting profits, 70, 75, 80 pips. Awesome. Never really went against us. In fact, it didn't go against us. That's a great trade. Now we have disagreement between price and momentum. That divergence gives us confidence to trade from a nice high level. So we look for confirmation yet again. And what do we have? We have this candle breaking the trend line. We have a couple of indecision candles. We have another bearish candle right there. That candle is very acceptable for a sell. So right here. So we can take a sell trade right there. Okay. You notice how we go from high to low. Let's see if we come back and just try to balance out some of this move. In fact, yeah, and again, I honestly did not rehearse this. I'm going through this chart just a la carte, like just scrolling through thinking, I think I can figure this out. If we go from this low to high, think about those percentages. Think about those percentages of this move is 0 to 100. Could we get back to roughly 50%? We can probably pull back all of the way, but if we get back halfway on a trend line break, can we safely protect some profit? And the answer is yes. So let's take a look at something like a Fibonacci retracement. From this low to high, right there. There's my retracement levels. All right, so this would be the top to the bottom. What's our halfway point? Right in here. So if we sold it around 1200, that halfway point puts us around plus 50. So can we safely get back there and say this move has successfully balanced? Yes, we can do that. That's, again, a conservative way to take some profit, but a high probability way to take some profit, right? Do you have to close it right at that 50% zone? No, of course not. You can start putting in a stop loss, turn it into a trailing stop loss, and see what price does. Because you notice that price continues to go. So we not only have strong disagreement with price momentum, it breaks the trend line, we go down to that 50% zone, we fall lower than that. But if we put in a trailing stop loss, we might get lucky on a few extra pips. This sell trade around 1200 goes all the way down to 1130. That's 70 pips. But we looked at 50% and 50 pips. That's a nice chunk of profit. It goes down 70 and then reacts aggressively to the upside. That's okay. Let's take our pips. So as we scroll back here, do you see what we're doing? Let price set us up, right? Let price give us the trend line. Let price set up the neckline. Let price give us the price pattern, all this good stuff. And then we just trade it. And we trade the right side of the trend line. Right side of the trend line, right side of the trend line, right side of the trend line, right side of the trend line. Right? If you do this routinely, you give yourself some small trade sizes to participate, you give yourself some small trade sizes to work through price patterns, we can make a lot of consistent profits. Okay, to take this one step further, this is going to be the combination you see in this video series. The combination of trend lines and support resistance and price patterns. Those three things combined. You don't need any indicators on your charts. You could trade with nothing but price only and be a very effective trader. All right, so as I promised, I want to go into a few more currency pairs or a few more time frames and a few more instruments to show that this is valid on a ton of financial instruments. So let's do that now. All right, here's the stock. This is Tesla. Why did I choose Tesla? No particular reason other than the fact that it is volatile. We had a lot of great movement on it, obviously from the lows of like $200 to $900, but that's not the point. Right here, if you look at what price is doing, this is a 1 hour chart, but if you just look at price for a second, what do you see? You see equal highs, you see equal lows. So the first thing I'm going to do is look at resistance and look at support. Now, if we see this high and this low, now when it comes to stocks, I'm usually not trading a lot of stocks on margin. I don't like to sell stocks if I don't have to. I would prefer to buy low and just buy low and see if you believe in the company and you want to invest and be a shareholder and a stakeholder, then yes, you buy and you want to hold it for the long run because you want to see what your return on investment would be. But if we're looking for an easy way to buy an instrument, we can look at trend lines. So if we have a low here, let's just use this structure and move forward and see if we have a chance to buy it again. Because what we're going to look for is a series of trend lines to buy. Something like this, for example. If we break that trend line, we would buy the right side of the trend line. This, in fact, is a beautiful spot because we have, this high connected to this high, which is resistance in the future. We have these lows right here. We have a low, we have a low, we have a low. You could actually connect the dots there and have that future support. So we could really start this trend line lesson right there. All I'm doing with that trend line is waiting for price to create a high to low, lower high to lower low, and notice how it's coming into a support level. So connect the dots right there. Now you can get more aggressive and you can see that price is on the right hand side, but we're not at support yet. So don't get too aggressive because price breaks the trend line, but we're not at support. Look for that as a convergence or a confluence. If it's not at a big level support that we've already noted, we might want to try to buy a little bit lower. But you can see this is something interesting. Check this out. Look, you notice what I said on the right side of the trend line? If you're on the left side versus the right side, you notice that all we do is we break the trend line, come back and retest the back side of the trend line, and then go higher. Right? You can still buy based on that setting. Based on that, trade 1 is the break, trade 2 is the pullback or the equal low, trade 3 is the back side of the trend line. But like I said, don't rush the trend line. Just let price set up from highs to lows and structure like support and resistance. And we're going to set the trend line right there. Okay, now what do we have? We have a clean break of the trend line. You can buy it right there. You also see that price after we break the trend line, we pull back. We break, we retest, and we go. And again, for a stock move, I mean, if you're buying the instrument around 281 and you're trying to target the range high at 387, that's a big move that you're going to wait for. If you are looking at certain levels, you buy here, you can buy that pullback, or you can buy the equal lows. Anything in here would be totally acceptable as a trade, right? One position, two position. If you're looking to stop yourself out of that position, anything that closes significantly below this support at 250, I would get out of the trade. So what do we have? We have a chance to buy right there. We go up and we're getting paid on that a little bit. It pulls back down, comes back in to fill that gap, pulls back into support. So I think this is a fairly straightforward trade 1, trade 2, and then your profit levels up here with your risk below. So anything below 250 is our risk. Anything going up to previous resistance around 380 is our reward. If you're going to take some profit and pay the capital gains, you buy low, you sell high, you take profit, and then you look to do it again. Right? Would I short Tesla? No. Do I like to trade on margin? No. So I would just wait for an opportunity to buy another dip. If we have another equal low to buy, then I would try to buy it again around 260 or 250 or a nice trend line. Here we have another high in price. You notice that price is starting to fall. Let's start looking for a chance to connect the dots. Now, I could run into this trend line here and we get a slight trend line break, but are we at support? Just like we talked about over here, we're not at support. So if we're not at support, let's not rush into the trend line yet. Let's see if price goes down one more time. Okay, here we go. So this was a trend line break. It's fine. We had an equal low at an intermediate spot. It went up, but you notice that price is stuck between resistance and support. There's really not a trade there. So if you follow the trend line, could you have bought it? Sure, but it's not really where I want to buy it. I want to buy it down here, not here. So I wouldn't trade that. I wouldn't trade that. I would just wait. All right. So if it's coming into support, do we have another opportunity? Let's find out. If it comes near support, we're looking for a nice clean trend line break. Now, as I'm noticing this, we might want to take, a slightly less aggressive trend line. And you see how we have a high and a lower high and a lower high. Now, it might not be as aggressive, but if price comes back into this support level, we probably have a really clean trade in our hands. Let me move this out of the way. We probably have a really clean trade in our hands just like this. Look at that. Connect the high to the next high. Lo and behold, that's another high that gets connected as well. So we have 3 touches on this, and we're coming down into support. Now, if you want to be more aggressive, you can take another trend line right here and connect those levels. And then shortly after, we have our trend line, a little bit more aggressive trend line because we're into our support zone. We can take a buy trade. Again, if you're looking at support resistance, you can buy it right at support. If you're looking for trend line confirmation, it's right over here. So you're looking at a buy trade around 270 to 271. And price rallies back to the outer trend line that you had already drawn. From the highs to the highs to the highs, we get back to that trend line. Now, this is an interesting move because we get to this outer trend line. You notice that price does not break higher. You notice that we have this low to high. This is a gap lower. Now, this is either going to be a low, high, higher low, and we better see price start wanting to break higher again. Because if price takes out this low, we're coming back to retest these lows. Again, the risk is still down here. If we're going to take this trade, this is where our stop loss would be. And again, just because this is a stock doesn't mean we have to sit and hold the trade forever. We can still stop out of stocks and certainly get back in. All right? So all I'm saying is if this is a 3-wave move, 1, 2, this better make its way back up towards this trend line again and break above 290 and start pushing higher than 290. If it comes back down to 250, that is support. If we break below that, we're probably going to go lower. All right, so let's see what happens. Do you start to notice that price is not pushing higher? Do you start to notice that we're back to the lows? Let's see what happens. There's support around 252. We're not breaking the trend line. We're not breaking the trend line. And then lo and behold, boom, we break support. So this would be a lose. You would take this buy and you would close out for a small loss right there. Now that small loss, that pales in comparison to what you have on the buy low earlier to that big run to the upside. And I want you to notice something. Just because we took this trade and stopped ourselves out because we're using good equity management and using some rules, because this did break our structure, what do you think is going to happen when we break this trend line here? You notice that this trend line has not been broken. What do you think is going to happen on the right side of that trend line? Left side of the trend line, right side of the trend line. I would be pretty certain that if we break this trend line, this is going to be a bullish move that we want to be in. So let's take a look. So price is making new lows. Again, this is support. Support broke, became resistance. Price is pushing lower. This is just straight out of support resistance and straight out of trend lines. This is structure. Let's see what happens. We push a little bit lower. Okay, now, of course, you can look at this and say, well, I draw a trend line and try to get back in early. All right, maybe you do. Maybe you look at this as a recent move to the downside. You try to get in again. That's fine. So you're getting in around 190. You have some confirmation. There's a low around 179. We're starting to break that trend line. I'm telling you, you can keep this really simple. If you draw this more aggressive trend line, fine. I'm looking at the validity of a higher time frame and this trend line, which is just really straightforward. You connect this high to this high, and it's amazing how often price has reacted to it. So now, let's look at what it did. The more aggressive trend line can get you in earlier, but the cleaner trend line is right over here. This is the clean trend line break right here. Boom. It's right around 225. All right, now, if we break this level, I would do the same thing because this was my low. If I was going to take one position here, I would be willing to take a second position either with a pullback on the backside of this trend line or back at the lows. And that would be kind of my built up position on this particular setup. All right, so let's see what it does. Okay, we go up, we pull back. Remember, this can still be a three-wave move. This could be 1, 2, and then our next move is going to be a three-wave. We could be pushing higher. Let's see if the bulls want to come in and push this higher. Okay, have we taken out the lows yet? Did we get our pullback to the backside of the trend line? So this is our 1, 2, and it gathered up some equal lows. Again, I'm not going to say that I bought that, but if you bought the trend line break and you were waiting for this level to get filled, you didn't get filled, but you had a position back here. And now look what happens. You know, and this is part of the reason that I buy stocks and I don't sell stocks. You know, unless it was just a bubble type trade or I absolutely hate the company and believe that it is doomed, I would rather just buy a stock and hold it. You know, or buy a stock to make a gain and then look for opportunities to buy dips and buy lower or buy at whatever good price I can get my hands on. So buy the trend line break, you know, position accordingly. If we have an equal low filled, that's a great structured support level. We have our 1, 2, 3. But again, as we're buying and holding, you know, I know this is a little bit more fun to show, but you're talking about buying and holding for one of the most ridiculous runs we've seen in a long time. You know, breaking around $200, going up to nearly $1,000 in just a matter of a couple of months. It's crazy. But it's the same concept, okay? If it's a stock, if it's Forex, if it's a cryptocurrency, it doesn't really matter. I've shown this before on the structure charts. You know, here's Bitcoin. Take a look at this on a higher time frame. Look at what price has been doing. There's a high, there's a high, there's a high, there's a high. Just connect the dots. Connect the dots. And what happens on the right side of the trend line? This is straight out of my module. Okay, we break, we retest the lows, we go. We break, we retest the lows, we still stay on the right side of the trend line. So it's trade 1, trade 2 if you want the pullback, or trade 2/3, just work the area. So it's really this. You can take the confirmation trade and you can trade the lows. Trade 1, trade 2, give yourself a break even right here, and then you're in profit. Look left on your chart, that is a profit level. You can also go after any type of surplus when it comes to equity management. What were you risking on the trade? What are you offered in reward? Can it continue to run? Yes, it can. If it stays, now that you have this trend line established, or this trend established, now you use the trend line to stay with it. So this becomes our bullish trend line where we would buy the dips. Because if we have price going and continuing to go up and pull back, look for this to be a dip to buy and be a dip to buy. And you stay with that until you see overbought conditions, divergence. And if it's a stock or an instrument that you would rather buy, look at taking profit, look to get back in, and then take profit at a higher price. So we're constantly looking for chances to buy low and sell high. Forex is a trader's market. Cryptos, in my opinion, is buy low and hold. Stocks, in my opinion, is buy low and hold. Obviously, there are levels in stocks where if I buy low and I take profit, if I was risking 1% of my account, or I guess in stocks sometimes I'm looking at 5 to 10%, I'm willing to take more position trades like that. Let's say I put 5% of my portfolio. If I have a 10% or 15% return on that position, that's a 2 to 1, 3 to 1. It's the same game. So it's just math that we're doing. It's just probabilities, but it's structure in the market. All right. So different time frames, different instruments. Trend lines work the same way. Don't get overly crazy. Don't get trend line happy and just start connecting every high and every low. Just let price start setting up. Take a look at your chart, see what price has been doing. If you want to sell this, look, there's a trend line right there. You see a low in price, higher low, higher low, higher low. Just connect the dots. Connect the dots, what happens? We break the trend line, we retest, and we work our way down a little bit. Structure is amazing. If you use support and resistance and trend lines and see how price behaves off of them over and over, we can make a lot of great trades. Okay, so I hope you enjoyed this module on trend lines. Again, this is Chris Pulver for Keep It Seriously Simple, a best trading strategy video series. Like it, subscribe to it, and plenty more where this came from. I'll see you soon, everybody. Happy trading.